It's time for Home Loans Radio on Real Radio with that mortgage guy, Don. Join the conversation. Text us at 77031. Now, here's that mortgage guy, Don.
Hey. Good morning. You are listening to the Home Loans Radio with that mortgage guy, me. That's Don, and I'm here doing what we do every single week for you. I'm here with my crew talking about what, MJ?
Ooh, mortgages.
Exactly. Good morning to you. How are you?
I'm good. How are you?
Excellent day. And also here with us, as usual, back from his week away, his week vacation, we got the Fritz man.
Soy estadounidense.
Hola, El Presidente. How are you? How was your week off, Fritz?
Oh, it was great. It was bien.
Yeah, what'd you do, man? Anything fun on your vacation? Did you just stay at the casa and scrub the floors and clean the car and empty the closets and all that?
No, I don't think I did any of that. I went to Stewart.
Somebody's explained to you what a vacation is.
I went to Stewart, Florida, saw Tom Papa, the comedian, and then went to Bathtub Reef and had a good time, just chilling on the Florida beaches. As I said, might I add, I was going to do once October hit, because that's when the real heads around here in Florida, they know you go to the beach in October, November, December, January.
That's right.
That off season, that's when you go.
And Bathtub Reef, what is that, like a smoke shop?
Yeah, you would think, right? I thought so. I was not wearing any clothing. I thought it was an actual bathtub. They said no. And then I said, I thought that this was bathtub grief. And they said no.
It's where people body shame you.
Came with all your sad little notes.
Yeah,
that's when you line up here for Fritz's bath.
That's when you show up, to use your buddy's shower because you don't have one, or times are tough, and then you just see that bathtub is not nice.
Oh,
that's a bathtub grief. It was really cool. It's a natural depression off the coast of Florida where the coral reefs are 200 feet out, and during low tide, it's this 3 foot deep, 80-degree water, just beautiful, serene, calm, beautiful.
Oh, that sounds amazing. I've lived in Florida a lot of years. I've never heard of that before.
And now you have.
That out.
Yeah.
Super cool.
So that was fun. You did that. You had a little vacay. You missed the show last week.
I missed the show.
We did it without you.
I know, and I saw that you didn't pay me for that, so that's fine. That's fine.
That is totally untrue. Do not even start that rumor. That is not true.
Yes, we pay you whether you're present or not.
I love you guys.
We pay you.
Whoever pays you. I don't know.
In goodwill.
Yeah, you do.
Well, we are here doing what we do every single week, talking to you about mortgages. Guess what's going on in the mortgage news world, MJ?
Tell us, dear leader.
Okay, I will, since you asked so nicely. What's going on in the mortgage world? I've been talking about this. What have I been talking about? Go ahead. You know what I've been talking about. What's going to happen, MJ?
Yes.
I've been telling everybody for weeks.
Yes.
Get off the pot. It was time to, if you haven't refinanced, if you were looking for record low rates, I've been telling you for a couple of weeks, or no, probably a couple months. Now, it was the time. It was the time in September. It was the time in August. And things were starting to tick up. I gave the warning signs for a couple of weeks in a row that things were ticking up, and bam, it happened. The rates jumped up. Not crazy, not really crazy, but they're definitely over, on a 30-year fixed rate with good credit. We were hanging around in the high twos. They have tipped over. Now we're into the 3% range, the low threes. And it moved there. There's a couple main reasons that it moved there. The main two are the argument in Washington over the debt ceiling, because the country's inability to pay its debts affects how people feel about investments, about treasury bonds, and the mortgage rates are based on, loosely, they're based on what happens with the treasury bonds. The other piece is the what's it called? The infrastructure bill.
The infrastructure bill.
The dang infrastructure bill.
Ding, ding, ding. Bell for Dawn.
Ding, ding. Oh, wait, I have it turned down. Here we go. Ding. No, you can't hear it. Never mind.
Okay. Good. Well done.
Thanks.
Fritz is still on vacation,
there
but
you go. Really
there he
good.
is. He's back,
Get out of the bath, Fritz.
And so the infrastructure bill is another big one. You're thinking, why? Why would that affect mortgage rates? Well, whenever we write a big check, like a $3.5 trillion check, which we haven't written yet, but they're trying to, there may be $1.5 trillion, it may be $2 trillion, it may be $3 trillion, whatever ends up going through for the infrastructure, which I'm all for. I like my bridges being solid,
One thing you want about a bridge,
fresh water.
You want your bridge to hold up.
Yeah, I'm all for the infrastructure bill. But the idea that it might pass is worrying some of the markets because that money actually has to be paid for. And we pay for that by selling our debt in some portions of it, which means selling treasury bonds and 10-year treasury bonds, 30-year treasury bonds, depending on what they plan to sell. When you sell a big batch like trillions of dollars, that affects the amount the interest rates are tied to that. It affects how much the bond yields are and so forth. So investors are kind of all pulled back in some areas to wait and see what happens with the infrastructure bill and what happens with the debt ceiling. Basically Washington is messing up the interest rates right now. So they've gone up a little bit. Will they come back down after we resolve this? I don't know. I don't think they're going to head back down below that 2% mark. I mean, the predictions from Fannie Mae, from Freddie Mac, from FHA that I've seen, you can go on their websites and they predicted out the next 5 quarters is that the rates for this year are going to hang out in that low 3% range. So you can still get a really good deal. You can still get a good rate. It still may make sense. If you got a 4 or a 5 in front of your rate, it's certainly going to make sense to consider a refi. The purchase market is actually improving. We're seeing some leveling off of prices. So it's going to be a really good time to buy, I think, over the next 3 or 4 quarters as the prices kind of stabilize and aren't climbing as rapidly as they were. And the rates stay solid down in the 3% range. So it's really going to be a good time to look at doing that. You can text in at 77031 as always. You can also go to the website at homeloansradio.com. What kind of things can people do there at the website, MJ?
Oh, they can read reviews.
They can read reviews. I looked at it this morning. Guess how many reviews we have on the website right now, MJ? Guess sooner.
300.
300? Have you not been paying attention the last 2.5 years when I talk about our milestones that we had on the reviews?
Maybe not.
Fritz, do better. What is your guess?
All right, Fritz.
3,000.
I love your optimism, but no, you are farther away.
Fritz, you also have not been paying.
What do you want from me, Don? All right, I was in a bathtub for the entire weekend.
We're busy. We're busy on the show. We're doing other stuff. We can't always be listening.
Are you? You're both busier than me on the show. All right, that's cool. That's fine. No, well, to be fairly specific, as of this morning, 823, and that's in the last 2.5 years since we've been doing the show. Wow. 823 reviews. That's pretty good with a 4.92 average still.
That's awesome.
Out of 5, I should mention.
That's very good.
Yeah.
Yeah, that's amazing.
But yeah, if you want to know what we do, you can go there on the website and check it out. Look at the reviews. You can read through them. People say nice things about us. We do a good job. My team does a great job. And so you want to know what we do, you can go there. You can also apply for a loan there. You can hit the button that says apply now. If you want to find out what kind of a quote you can get, you can do that there. You can also go and listen to all of the past podcasts, except the one last week when Fritz was on vacation. I haven't decided whether I'm going to put that one up or not. But because I missed you so much, Fritz.
Right.
I want you to be present in all of the.
We need a full quorum, which is 3.
I never understand how when there's always guest spots on television programs. Those I have just hats off to those people who could just jump in there and get the job done. It's daunting and it's really, really hard. So you guys doing that pretty much solo last week.
From now on, we're taking vacation whenever you are.
Yeah, we'll just do it. We'll just play 38 Special for an hour.
Oh yeah, I can do that. You want to hear some?
No.
Sure. Give the folks a sample.
You got it.
They're all going to think we're in trouble.
Yeah.
No, I don't know if I can pull it up here. Wait.
Okay, that's all right.
No, I can't.
So,
technical difficulties.
Are you ready for a question?
Oh, yeah, we got, you can text in and answer your questions, or, well, you can't answer them. I can answer them. If you text them in, we'll answer them here on air. Please do. That's really what we do here on the show. Mm-hmm. Sometimes we just meander and talk about nonsense, but,
sad baths.
The idea is that I answer your mortgage questions. I'm a mortgage expert. Go ahead, MJ.
Here's a question where our first-time homebuyers make over $100,000 a year, and we've been told that we can't get our first-time homebuyer benefits because our income is too high. Is that a thing?
Well, it can be a thing. So the term a first-time homebuyer is really kind of a loose term. Different loan programs mean different things when they talk about it. So if you're talking about a down payment assistance program, which usually requires you to be a first-time home buyer or not have had a home in the past 3 years, and at which point you'd be considered a first-time home buyer, then they are typically going to have income caps. It's going to have a credit score limitation where you got to be above usually a 640 or a 660 score, and you can't make too much money. Those programs are made to help folks that, need more help than others. Some of them you can't qualify for. If you've got a bunch of money in the bank, you can't qualify for down payment assistance because they're going to say, well, you've got $30,000 in the bank. No, you can't qualify for down payment assistance. Or if you're making $100,000 a year, usually you got to be at or below the average median income for the county where you live. So depending on which county that is, that can be anywhere from $45,000 to $60,000 a year in order to qualify for the down payment assistance programs. But there are other programs that are considered first-time home buyer. Like FHA is considered a big first-time homebuyer program because they allow such a low down payment of 3.5%, and they also allow lower credit scores. That's actually kind of breaking news. I meant to tell you this earlier that when we had the pandemic back in March of 2020, FHA, the scores went up where you had to have like a 660 or 680 score in a lot of places, depending on where you were, and then that kind of went back down to 640, and it went down to 620. And now, as of last week, we're back down to where you can get pre-approved or approved on an FHA purchase or refinance at a 600 score, assuming everything else looks good. So that's a good first-time homebuyer program because it allows those lower scores, and it also allows higher debt ratios. So on that program, it doesn't matter how much money you make. There's also, with Fannie Mae and Freddie Mac conventional loans, there's a first-time homebuyer program where you can put down as little as 3%, and you get discounted PMI. But again, on that program, you're going to be limited and capped on how much you make. So it just depends on your definition of first-time home buyer, and there's not any official definition. Each of the lending entities has their own idea of what first-time home buyer benefits are. So for some of the ones where you're getting cheaper money or you're getting a special discount because of it, you might be ruled out because you're making over $100,000 a year. So I guess the answer is yes and no. I went the long way around, but I think the answer is yes and no on that.
Nailed it.
If you want to find out
more, the answer was maybe.
Yeah. If you want to get specific and get pre-approved, then what we'll do, you go to homeloansradio.com, you hit the apply now thing, and then we'll look at your whole scenario. And then one of my expert loan officers will tell you which of the first time home buyer programs you can actually get based on your income, your score, the amount of savings you have, and that kind of thing. So we've got to navigate through it. There's quite a few programs out there. Excellent question. Thanks for sending that in to 77031. You got some other ones coming in?
Sure.
MJ?
Ready?
We're coming up on a break here. You got a short one?
Yeah.
No?
No, I'll catch you after the break.
I appreciate that, because what you normally do is wait till we've got 30 seconds left and you ask me a really hard question.
I know.
This is when she goes, "Dear Don, I am a 26-year-old single man. My question is this. In 1978...
Right? Compounding interest at 42% minus 47.
You're not exaggerating, Fritz. You're not exaggerating. Okay. Well, good self-control there, MJ. I really do appreciate it.
You're welcome.
You can text into 77031. You can also go to homeloansradio.com. Not only can you ask us questions here during the show, you can go there anytime during the week and send me a question. There's a box there that says what, MJ?
Ooh, shout out.
Nope.
Or chat with Don.
Nope.
Or Apply now.
You are not paying attention.
I am. Those are all boxes that are there.
Those are all boxes that are there. I'm just
That
saying.
is true. Yes. The one I'm referring to, or you can ask me a question. I guess you can't say chat. You can do
the first one I said.
You could do chat with Dawn. That comes immediately like a text message, but you can also just go in there and type a question in the Ask Dawn section. And those come to my email. I answer every single one of those, every single one that I get. And you can ask questions there anytime during the week. You can also go there and hit the apply now button. And that